Thank you, Marco. Well, welcome all of you. We're a small group. Hopefully some other people will join. Please allow me to introduce myself. My name is Ruud van Zijl. I'm working with Vermette, TGS partner in the Netherlands. Vermette currently has about 300 employees. My presentation still mentions 260, but there's an office that has joined us very recently. So that became a little old news. Vermette is a full service office for entrepreneurs. We have accountants, tax lawyers, and various other specialists. I've been an accountant for 25 years. For the last 25 years, I was an independent entrepreneur. My office joined Vermette about 3 years ago. And I can tell you it's a good office. I'd like to share some thoughts with you about doing business in the Netherlands. And as Marco mentions, if you have any questions, by all means, don't hesitate. The Netherlands, currently some 17.5 million inhabitants, mainly known for its logistics. The Rotterdam harbor, one of the biggest ports in the world, Schiphol Airport, the main airports in the EU. That attracts a lot of business. Also in production, where the Netherlands are strong in chemicals, the food industry and electronics. The Netherlands is known for its financial services. There's a lot of financial parties choosing the Netherlands because of all the things I'm listing right now, I guess. Our main trade partners are, in that order, Germany, Belgium, Luxembourg, China, UK, France, Russia, and the USA. And the Netherlands are also often chosen because compared to other European countries, we know very little strikes. The Netherlands is really a culture where we try and find each other at a negotiating table rather than that we strike just to get our ways. We have little language barriers. Dutch is a very small language. Very few countries around the world speak Dutch. So in order to be a trade partner as such a small country, we have to know our languages, and that helps for other countries to choose the Netherlands as their European base, I guess. We're an international oriented country in that way. Last but not least, the Netherlands has concluded a lot of tax treaties with a large number of countries as to avoid double taxation. So those are all specifics of the Netherlands, why any company would want to choose to come to the Netherlands. I'll be talking to you about starting a business in the Netherlands. And if you were to start a business, there's basically two ways. I guess that's the same as abroad. You can start an incorporated company. That is done before a public notary in the Netherlands, or an unincorporated, which is registered with the Chamber of Commerce. Incorporated, we know the private limited liability company, which is called a BV. I'll be explaining a lot about that later on. A public limited liability company, only difference really is that the shares are open for trade, not registered by name. A corporation and a foundation. As unincorporated, we have a sole proprietorship, which we call eenmanszaak. We have a commercial partnership, what we call a VOF, a partnership called a maatschap, or a limited partnership, a CV, if you will. In this presentation, I'll be mainly talking about the private limited liability company, because that's 99 out of 100 times the chosen version, especially in the small and medium enterprises. And it's the most popular form for startups in the Netherlands. A BV has a certain capital, and the capital demand is that at least 1 cent is being brought into the company. So there's no, there used to be a minimum of 18,000 euros. That's been stricken a couple of years ago. And you can start a company with as little as 1 euro cent. The shares are registered. There's a register in which a public notary registers who the shareholders are, and shares can only be traded before that public notary. This is a little different from NV. A private limited liability company has a board of directors. And the board of directors is appointed by the general meeting of shareholders. The general meeting of shareholders in the end is the chief of the company. They decide, but they can only decide once they have a meeting. The liability of a private limited liability company obviously is limited. It is limited unless a director intentionally does something or doesn't do something which he should have or shouldn't have done. And then obviously that liability can yet come to a private person. The creation of a Dutch entity like a limited liability company is done before a public notary, as mentioned. And one of the most annoying things, I guess, when opening a Dutch company is that you have to be identified, and that identification needs to be done before that public notary who found your company, but also your accountant, us, will ask for that. The bank will ask for it, and if you want to rent a property, the party renting out that property will ask for it as well. All that has to do with the same legislation, the legislation against money laundering and terrorism financing. And we then need to identify who the ultimate beneficial owner of that company is. And we need to be able to prove that. That sometimes really is a hassle, because especially banks are notoriously, well, let's put it nicely, they try to avoid any risk here. So it sometimes becomes hard to open up a bank account, but we can help you with that. Finding housing, office spaces are readily available. Private housing, not so much anymore currently, but the rent amounts you need to think about are the rents mentioned down here. Amsterdam being the most popular and the most crowded, but also the most expensive place. If you get away from the bigger cities, rent goes down considerably. There's a number of subsidies or grants that are available for companies, also on startups. These mainly see to innovation purposes. You can claim wage tax reduction if you qualify for that innovation tax. And you can also ask for tax reduction on corporate income tax once you construct an asset that will generate revenue. And you need to apply with the tax office before. There's subsidies on environmental issues and for electricity saving investments. And there is tax reduction on the corporate income tax for small scale investments, starting at €3,000 and I believe decreasing versus up until an amount of €600,000. Up and above, there's no subsidies. The 30% ruling is very interesting. If you get knowledge workers, as they are called, workers who have a skill or experience that is rare on the Dutch labor market, and if you get them from abroad, 30% of their gross salary can be paid free of taxes as remuneration towards their traveling and lodging expenses. That can be very interesting as well. There's some issues on financing which can be interesting. The Dutch government wants to stimulate small and medium or even larger investments. And if you can't get that financed by banks because you have a lack of security, the Dutch government will warrant these loans for you. You pay a small premium, and if ever the bank can't get their money back, they'll cash in from that fund. The fiscal legislation, that's, I think, what will interest most of us. The participation exemption is an interesting subject, I guess. Dutch companies paying out dividends to other companies, not natural persons, are exempted from dividend tax. The arm's length principle is one of the issues that is used by Dutch tax office. If you are founding a subsidiary in the Netherlands and you're charging whatever from abroad, you need to do that at arm's length, meaning you need to be able to prove that you could have charged that price for that service or product to any other party. You cannot undercharge within a cross-border group. Otherwise, that might be considered a hidden dividend. A fiscal unity is one of the possibilities in the Netherlands. If you have a group of companies for which more than 95% of the shares are within one hand, so a full daughter, you can file taxes between, you can file taxes for that group of companies. So whatever you do within those group of companies, say a mother and a daughter, doesn't really matter because it won't be taxed. The tax office, upon application, will tax you as one entity. So that leaves the possibility to well, to freely trade within several companies that together form a fiscal unity. That can be done for the VAT and for the corporate income tax. It cannot be done for wage tax. The Dutch government has a competitive tax system, or at least we tend to think so. And I'll be coming back to that. There's mandatory disclosure rules on cross-border arrangements. The Dutch tax office is not a tax office that will issue out penalties without any cause. They will always try to see if we can come to an agreement, and actually we can present cases to the tax office, a tax ruling, and if we later on act as presented, which is of course a condition, then we will be taxed as we previously discussed. And that possibility to discuss with the tax office, this is what I'm going to do, this is how I'm going to trade, how will you tax me if I do so? It's called a tax ruling, but it comes hand in hand with the obligation for accountants and tax advisors to spontaneously provide disclosure to the tax office on cross-border arrangements. So if we have a mother in, let's say, France and a daughter in the Netherlands, and we see a way to save tax, then we are under an obligation to present that to the Dutch tax authorities. The advantage, of course, being we won't get punished afterwards. We won't get any penalties. Interest deduction. Interest is deductible within group companies if it's more important than 30% of the EBITDA, or it isn't, if it's more important than 30% of the EBITDA, or if it's more than over a threshold of 1 million euros. A tax declaration needs to be done within 5 months after the year, and there's an extension scheme. If you file your tax declaration through an accountant or a tax advisor, they can ask for an extension and they will get it spontaneously for over 1 year. Corporate income tax. 2022, it's in 2 scales. The first 200,000 euro, as from 2023 onwards, will be taxed at 90%. Currently, we pay tax up until 395,000 euro for 15%. But given the fact that the Dutch government has spent so much tax money on keeping companies alive during COVID, they have raised the first tranche of corporate income tax, unfortunately. The higher scale is unchanged at 25.8%, but it used to be over 395,000 euros. As from 2023 onwards, it will be as over 200,000 euros. We know a regulation for loss compensation, which goes 1 year back and goes unlimited forward. It used to be only 9 years forward. However, during COVID, where companies had large losses, one of the measures that the Dutch government took was to make sure that loss could be compensated unlimited, carrying forward. There's a limit on depreciation of buildings. Basically, it depends whether you rent out the building or you use the building yourself, but and that depreciation is liaised to a tax or a state-owned, that's the wrong word, a state-owned appreciation system of those buildings. Income tax for private persons. In the income tax for private persons, there's a box system. It depends what kind of income you have on how it is taxed. There's 3 boxes, and in box 1, you are taxed for your taxable income on work and your home. The taxation, as from 2023 onwards, is at some 37%, up until 73,000 euro of taxable income, and that's progressively charged above with a maximum of 49.5%. In box 2, the taxable income is levied on substantial interest in a company. So if you have more than 5% of the issued shares in a company, you are taxed in box 2. And that will be for 24% of taxes up until 67,000 euro of revenue, and up and above at 31%. In box 3, you are taxed for the income on your savings and investments, and also on interests smaller than 5% of the issued share, shares of a company. And I'll be coming back to the box 3 taxation. The Dutch tax office works with provisional payments and provisional declarations of tax. So if you earn an income, you need to make sure that in the course of the year you file a provisional declaration of tax, and you'll get a provisional tax assessment, which you need to pay in the course of the year. The tax return then ultimately needs to be filed before April 1st in the year after. But again, there's an extension scheme if you file through an accountancy firm or a tax advisory firm. So how does income tax really work? What is taxable income? Is the profit from business activities, taxable wages, taxable result of other activities such as freelancing, taxable periodic benefits and provisions such as alimony, government support, taxable income derived from the own home. I mentioned that buildings are valued by the government at a certain amount, and over that amount you may need to pay some tax. Negative expenditures from income provisions are also taken into account, and the negative personal deductions such as expenses for income provisions, insurance premiums for income provisions and for disability, basically any premium that you pay to get income later. The premium is deductible and the income later will be taxed. And there's personal deductions related to personal situation of the taxpayer, such as medical expenses and school fees. Also deductible is that in next sheet, I'm not sure. Also deductible is the interest you pay on your mortgage for your own home. For entrepreneurs, how does it look with taxation for entrepreneurs? I'll be doing this shortly because I'm sure most of you won't be in that situation really, but there's a tax-based reduction for entrepreneurs, which is higher in the first 3 years. Government has just announced they're decreasing that tax-based reduction. Again, for research and development, as with limited liability companies, there's a tax-based reduction. There's a tax-based reduction for entrepreneurs on reservations for retirement. However, Dutch government just announced that they'll be abolishing that. And there's a tax-based reduction for 14% for small and medium enterprises. In box 2, remember box 2 is where you get taxed for interests larger than 5% of the issued capital of a company. And that is including the shares that my wife may have or my children. It's considered within a family. There's taxable advantage. The taxable advantages include dividends. That's mostly what we're talking about. Gains or losses on the sale of that participation, and the deductible costs include consultancy fees and the interest on the loan taken out to finance the purchase of such mentioned shares. Box 3, remember the box where you are taxed on your other possessions, bank accounts, maybe some real estate that you're holding or other small interests in companies. A 31% taxation was the rule on the fictional return the government said you would have. However, the European Court has decided that that can no longer be the case. So now the Dutch government is a little lost on how they need to fix this taxation. What they have done is they have mentioned that we will currently be taxed on the actual possessions minus our deductible debts. The deductible debts will be deducted with the actual interest paid on those, and the actual possessions will be taxed based on a certain scales. For instance, bank accounts which issue little interest have a small fictional return. Real estate has a somewhat larger fictional return, and investments have yet another fictional return. And they're hoping that will be accepted. As from 2026 onwards, the taxation will be based on actual return, but the Dutch government just isn't ready with their IT systems to go there just now. So up until 2025, we're still charged on fictional returns, basically issued by the government as they see those in the market. Dividend tax. I mentioned the dividend tax exemption earlier, and no tax is withheld, amongst others, in the following situations where companies enjoy a dividend from other companies in an inland situation, or in a cross-border situation when we pay out dividends to a company established in another member state of the European Union. Should, however, there be a case where the Dutch government does feel it should retain dividend tax, there's a refund scheme for a foreign taxpayer under circumstances. And the dividend tax rate is set at 15%. The dividend tax in the Netherlands really is only levied when dividends are paid to a private person. Wage tax. Wage tax, of course, levied with employees. There's a withholding tax from employers. Employers need to pay the withholding tax to the government. And that, I see I still have a French line in here. I gave this presentation earlier in French, I'm sorry. But the dividend tax is withheld with the employer, paid by the employer to the government. And the tax includes social charges. The social charges within the Netherlands are also paid to the tax office within one amount. There's one fiscal return for social charges and tax, and one payment to the tax office. That, however, does not see to social charges which might apply to some sectors in which a collective bargaining agreement has been made between employers and employees. If such a collective bargaining agreement applies, then additional social charges will be charged, and those need to be paid to the separate organization that is founded by employers and employees jointly in that sector. Traditionally, you will find bargaining agreements within construction, within the hotel and restaurant business, within technical areas, and more More recent sectors, such as the IT, just don't have a collective bargaining agreement. So it really depends on which sector you're in as to whether you will meet those extra charges. Those extra charges obviously give extra benefits to employees. So I guess there's always an advantage. There's such a thing as the work expense scheme. The work expense scheme basically sees the work-related cost that an employer might choose to remunerate. And there's all kinds of tariffs in that work expense scheme and percentages. And if you go above, then the tax office will assess that the expense scheme succeeds a normal remuneration of cost, and that this extra remuneration will be considered as extra salary and will be taxed. But it's basically all clear up front. That's the good part about it. The 30% ruling I already mentioned for knowledge workers, remember? Obviously, value-added tax is levied in the Netherlands. 21%, sorry, is the normal tariff. 9% is the lower tariff, which is levied on such things as food and things that the government assesses as essential. Basically, the value-added tax obviously is a European tax. It's based on the direct on the community directive. However, we all know, I think, that certain member states adhere to that directive, and other member states choose to make exceptions. Same applies in the Netherlands, I guess. But basically, it's a European tax, so in essence, it will be clear to you. Declarations need to be done per quarter or monthly, and in exceptional cases, very small companies per year. And one of the new things, obviously, is the one-stop shop. Whereas you, if you export more than 10,000 euro per year to private persons within the EU, you can pay that VAT to the Dutch tax office, and the Dutch tax office will remunerate all the foreign tax officers. Obviously, if you're going to have start a company in the Netherlands, one of the things you will be looking at is personnel. It's important to have an employment agreement. And that employment agreement, if your employee is based within the Netherlands, employed by the Dutch BV, but basically, if he works in the Netherlands, then obligatory, the Dutch legislation sees to that employment agreement. I've oftentimes encountered foreign-based international companies who prefer to have the same regulations applying to their Dutch employee. It just doesn't work that way. And if you do, the Dutch employee afterwards, if things become ugly, can just cherry pick which regulation is most beneficial for him or her, and it really is a bad idea to do that. So please remember, a Dutch employee needs a Dutch contract with Dutch legislation seeing to it. That's one of the ways in which you can find employment. There's two other ways. Contracting agreement, which really only applies in the construction business, if the purpose of the activities is to construct an item with a physical nature. A builder will offer you a contracting agreement to build a house for you. And the other very popular way of engaging labor is a freelance agreement, an assignment agreement. And there's legislation on when a freelancer really is a freelancer, and when a freelancer no longer is a freelancer, but really is an employee, and you will need to withhold wage tax. So please be careful on employing freelancers, because sometimes if it looks like a duck, waggles like a duck, it's a duck. And the same applies to freelancing and an employment agreement. If it looks like an employment agreement, then really it probably is. And if you then haven't withheld wage tax and afterwards you need to pay them, well, then you're in trouble. So please don't go there, and please notify us beforehand so we can advise you. Concerning employment agreements, the minimum wage has just been raised by the Dutch government, given the fact that energy prices, and basically following that, a lot of prices are so much higher, and inflation is really rising. The minimum wage, which always has been applied in the Netherlands, has been raised with 10%, and now is set at 12.40 gross per hour. Dutch work week, by the way, normally is 40 hours, and in some sectors where there's a bargaining agreement, can be 38 or even 36 hours. That minimum wage excludes a holiday allowance. Employers are held to withhold 8% of a monthly salary, which then needs to be paid out in either May or June as a holiday allowance. And that comes on top of that minimum wage. Sometimes you're not free to choose wages. If a bargaining agreement applies, then salaries are usually scaled, depending on the functions that a certain employee might have, and you need to live up to that bargaining agreement. If you don't, you'll be getting in contact with the trade unions, and those usually are not very friendly with employers. Please be careful with consecutive employment agreements. You can get into 3 consecutive contracts with an employee, but if you get into a 4th contract, or if you extend a 36-month period, that employee will be your property. You will no longer be able to fire that employee or to end the employment agreement. So if you do want to end it, do it before. There's no termination during a fixed term contract. If you have agreed to a 9-month contract, within that 9-month period, there's no way of ending that contract. If you have a contract for indeterminate period of time, you may be able to end that contract, but you will either need to get into a legal procedure, you will need to file for economic reasons why you want to end that agreement, or, and this is mostly done, this is why in the Netherlands we don't go to court and we don't strike, but we find an agreement. You conclude an agreement with that said employee, and you pay him or her a transitional allowance. And that transitional allowance is a tariff set by the government based on the amount of years that employee has worked for you, based on the age of that employee, taken into consideration that sometimes older employee will not be able to find a next job as easily, and that in theory should allow that employee to get some additional schooling and to find another job. So what you see mostly, if you want to get rid of an employee, you have him or her come to the table, you pay him a little more than the transitional allowance, you will need to pay him or her anyway. And then usually we can part as friends. Legislation of the Netherlands is applicable on work in the Netherlands. I mentioned that earlier. And that, in a nutshell, are the highlights of what you need to be aware of when employing in the Netherlands or when starting up a business in the Netherlands. There really is much more to say about that, and a extensive documentation can be found on our website from Meta, a TGS partner. But I'm sure, Margot, that we can also forward that to all participants who are interested. Is there anybody who has any questions for me at this point?
Yeah, hi Ruth, my name is Andrew, do you hear me?
Yeah, I hear you quite clearly, Andrew. Hi.
Hi, nice to meet you. Thank you for your presentation, and thank you for for accounting. I always was on other planets. I can't do this stuff, and without guys like you, it's impossible to open a company. Yeah, I have a question. I'm a representative of 5 developers. We're like agile team. And we're are going to move into Netherlands. Now we work in Polish and in Lithuania.
Okay.
Our main question, should we open a company in Netherlands in Dutch to prove that we are like a reliable partner, or to Netherlands companies, it's not so important to work with in the same country? What do you think?
There's many aspects to that. First off, you can work within the Netherlands and be taxable within the Netherlands with a foreign entity, like a limited liability company from the UK or a German company. So if, for instance, you have a Polish limited liability company and you move through the Netherlands and your work is done out of the Netherlands, then that Polish entity would become taxable in the Netherlands and would be domiciliated in the Netherlands. Is that a practical solution? I guess not. I guess it's easy to start up a company within the Netherlands. The easiest is an unincorporated company. I mentioned before that we have several kinds of companies. And the unincorporateds are a sole proprietorship or, the sole proprietorship. No, that was not the right slide. Yeah, the sole proprietorship or a commercial partnership. So if it's you and 4 others, which I understood, then the easiest would be to go to the Chamber of Commerce, identify yourselves, make sure you have an address in the Netherlands, and the Chamber of Commerce would just register you as a commercial partnership. There's no other necessities apart from that. I probably would advise you to found an incorporated, a limited liability company, but that is done before a public notary. It's a little more expensive probably, but it really depends. And does the Dutch society look at you differently if you have a limited liability company? I don't know. I guess good service or a good product are more important than the shell that you put around it. The shell that you put around it should be based on risk. Is there a risk that you go bankrupt? If you sell fashion and you buy pink and it turns out that blue is the fashion, then you're going to be stuck with pink. However, that is not something you can insure yourself against. If your service providing company and some of the services that you have provided prove to be, well, to have flaws, you can insure yourself for that liability. So it really depends on the type of business that you have and the type of risks in that company, whether or not you want to open up a limited liability company or not, or an unincorporated. The other issue here is how much tax will you pay? It's not the same for unincorporated as it is for limited liability companies. And it really depends on your expectations. And you can always change your unincorporated into a limited liability company or the other way around. But that does take, well, you will need some advice at that point.
Yeah, thank you. Thank you for
this. Is that an answer to your question though, Andre?
Yeah. Of course, still, it's like, as you said, it's too general question and depends on the customer, on the situation, but I received what I want. Thank you.
Okay.
Thank you.
Any other questions? Can't believe I've been that clear.
Yeah, if other don't have, I have one more. It's usually even more difficult to close company than to open. What's in Dutch? How difficult is it?
It's not hard at all, assuming you pay all your debts.
Yeah,
if you pay all your debts, it's one of the easiest things that we as accountants have to do. However, if you don't pay all your debts, obviously it becomes harder. But really, no, that isn't hard at all.
Okay.
Or at least it doesn't have to be.
Hope I wouldn't take it. Yeah.
Okay,
if there is no other questions.
I have one question.
Oh, please, by all means, Harun.
Actually, before setting up a company, it's very important to set some business agreements beforehand, so that you can set some money income and then settle up the rest. That's the easy way, I assume, to found a company in Netherlands. Before making business contacts and trying to get settlement and agreement phase, do you offer any setup that, for example, I have cybersecurity company in Turkey, Istanbul, but I want to, make that company a little bit, acceptable in Netherlands beforehand. What can you recommend in that perspective?
Well, in order to be domiciliated in the Netherlands, you need to actually have, and to be taxable in the Netherlands, a company actually needs to have substance in the Netherlands. As an example, previously, the Rolling Stones were a Dutch company. They had a virtual office in the Netherlands and they were taxable in the Netherlands. And obviously the UK government didn't think that was a very good idea because they saw the tax income fleeing to the Netherlands. And within the European Union, obviously, agreements have been made as to avoid such tax avoidance behavior. So companies need to have a certain substance. So if you want to open up a company coming from abroad and you want to be domiciliated in the Netherlands, you need to make sure that you have at least some of the following: a location within the Netherlands, maybe personnel in the Netherlands, an accountant in the Netherlands, a bank account in the Netherlands, and the activities actually need to take place in the Netherlands. Decisions have to be made regarding that company within the Netherlands. That is, you don't have to live here, you don't have to be Dutch, but if in order for the company to be taxed in the Netherlands and to be domiciliated in the Netherlands, decisions have to be made within the Netherlands. So you need to come here. Oh, something wrong with the microphone there. You need to come here as a tourist, spend a day in Amsterdam, make these decisions and go back home. That would work. In order for a company to be accepted in the Netherlands, I guess that's your question, Haroon.
Yes.
You need to fulfill most of the above, and it's really there's not one decisive factor that the Dutch government looks at. It's the joint picture that we get if we look at these factors and some others. Does your company have substance in the Netherlands? Can we actually say that economic activity is deployed out of the Netherlands? And that becomes important. Having said that, obviously, you need to be allowed in the Netherlands. We cannot, founding a BV does not mean you will get a visa to stay in the Netherlands permanently.
Okay,
Yeah.
that sounds kind of good. Thank you.
Is that an answer to your question? Yes.
Yeah. Also.
Okay. And once again, we can help you figure things out. We can help you finding housing. We can help you finding a public notary or liaise with that public notary on founding a Dutch entity. We can draw up these agreements you discussed, and we can make sure that it adheres to Dutch law.
Great, thank you.
And our TGS partners can make sure that things work in both countries. Because there's always two sides to trans-border agreements.
Yeah, that's right.
And that's one of the wonderful things TGS offers us other than presentations like these.